Hey friends, thanks for tuning in. I have Andy Hoffman from MilesFranklin.com back on the line for a very important update. Andy, welcome. How are you, sir?
Oh, I'm doing good as we approach the Ides of March and three major cataclysmic or potentially cataclysmic events.
Yeah, and March 15th is a key date. We'll talk about that in a second as we're having this conversation. Oil is down $1. Silver, of course, is down 24 cents. The bloodletting appears to never be over, Andy. 400 million ounces of silver per day trade at the COMEX, which now sports the largest silver shorts position in history once again. So I guess the cartel is getting ready for another slam down. Should we talk about that March 15th date, or should we talk about the vicious and endless manipulation of silver?
I think manipulation, but not just of silver. Which would you rather have? Would you rather have, again, I was an oil analyst for 10 years on Wall Street before I moved into the mining and precious metal spaces. So I know quite a bit about OPEC, and anyone listening or reading me knows that from the time of that OPEC initial agreement back in the fall up until now, I've harped on the fact how it's a complete lie. Anything that they do propose to do is going to fail, and that we are amidst an historic oil glut, which is destined to make oil prices collapse to record low levels. And with each passing day, new evidence such as today's record high inventories and surging production, and now Russia's cheating and compliance issues and et cetera, et cetera. So would you rather have an oil PPT supporting the price when the fundamentals for supply and demand have never been worse, or would you rather have a cartel suppressing the paper price when the fundamentals have never been better? I mean, in gold and silver, we now have, on the record, plunging production. I've said for years we're going to have it, and now it's mainstream. Gold production will fall 20 to 25% over the next 8 or 10 years. I'm sure the same is the case with silver, because I know production has peaked, even though we don't have the official projections out there. And 2016 was the record year for demand for both.
Right.
And as we know, because of all the suppression, there's pretty much no inventories left. That's why the German gold they got back wasn't the gold that it took them 3 years, and it wasn't the gold they asked for. And if you look at the COMEX, itself, it's got the lowest level of inventory pretty much ever. I mean, it's nothing. It's a couple of $100 million worth. So all we're waiting for is a crisis, and not the kind of real-life crises we've been seeing in the world, but the financial crisis that this manipulation has held off. And so when it happens, would you rather have the upwardly supported Dow in oil or the downwardly suppressed precious metals? I'm not worried. And as for what happened in silver, or it's not silver, it's precious metals, it's both, but they particularly attacked silver last week with that $2.7 billion sale at the COMEX Open, which is 20% of global production, by the way, if that silver actually existed. But look, as I wrote earlier this week in my 200-week moving average war article, that's what they were so scared about. The gold and silver 200-week, not day, 200-week moving averages, which were initially breached to the upside in 2003 and stayed there until literally the day of the April 2013 alternative currencies destruction attacks, were about to be recaptured on election eve, because they were at 1860 roughly for silver and 1260 for gold. That's exactly where they were trading, and after the election they went above those. So that's why the cartel went into action to attack, and sure enough, they were right back up at those levels on Tuesday, when suddenly, out of the blue, the Fed says, we're going to raise rates, even though, as they say it, I mean, I just looked today, they just lowered their first quarter GDP estimate to 1.2%. And all these numbers, economically, the hard data is at an all-time low relative to the soft data. And German industrial production fell over 7% last month. And there's all these elections coming up, and the debt ceiling next week here. So again, they are obviously at the end of their rope as far as the physical. They're desperate, and they're going to fight this war until they lose it. And I have no doubt that sometime later this year, those 200-week moving averages will be recaptured.
Yeah, I've had this conversation with Bix Weir. Of course, you and I have been talking about this for a very long time, but Bix pointed out just to me during this recent conversation that silver production in 2016 was down 3% globally, yet the COMEX paper silver trading, the derivatives paper on the COMEX, the criminal bankers, their trading volume was up 41%. So they're throwing 40% more paper silver at the market to keep the price capped. That to me screams desperation, Andy. And now on the back of that, we have this announcement after the market close on Friday the 3rd of March that the LBMA is in for another shakeup as Thomson Reuters and the CME Group are going to bail from their position as the silver price benchmark price setters, it's the price fixing scam over at the LBMA, which is supposedly the only physical silver warehouse trading in physical silver, I guess, on planet Earth. And you know that's as corrupt as the comics. So what did you make of that news? I think, again, it just speaks to the absolute desperation. They don't have any physical silver.
Right. I mean, it's the concept of diminishing returns, whether you're talking about silver manipulation or the economic manipulation, or even just, media manipulation, the lengths that they go. If you now have to say that the president is in cahoots with Russia, to start World War III just to get attention these days. And it's, this is for precious metal manipulation. Yeah, I mean, Bix's video showed how there's an exponential increase in the amount of shorting of silver. And the same goes, just look at the COMEX commercials right now. I mean, as of last week, it hit an all-time short position. I mean, we're talking about, I think it's 100,000, over 100,000 contracts net short. Keep in mind, silver's been, they've been net short the commercials, i.e. the government, from the beginning of time, from the beginning of the precious metal bull market at the turn of the century. And this is the highest level of short that they've ever had, which is, 100,000 contracts. That's, gargantuan amounts. And as Bix said, the amount of trading per se is up 40% just last year alone, because it takes an increasing amount of paper shorting just to keep the price from going up a little bit. And even with that, look where the prices are because of the drop in production, the rise in supply, and the drop in inventories in the physical market. It's just at the point where something is going to break in this area, whether it's in gold or silver or both. And, we haven't had, for all the terrible things going on in the world now, politically, economically, socially, monetarily, we haven't, because of this historic level of manipulation, which stair-stepped 50 notches higher the night of the election and hasn't stopped since, we haven't had an actual financial market crisis as a result. We haven't had a 1% down day in the S&P 500 in like 6 months. We haven't had a 10% correction for all that's going on in the world in, I think it's like over a year now. Or maybe it's 10% corrections. It's insane. We have bubble-like valuations, but anti-bubble-like fundamentals. And the same goes as, we talk about oil versus precious metals or copper. I just saw yesterday, copper is breaking down badly because it had the biggest inventory increase in like a decade yesterday. Is that ever going to happen in gold? It's the complete opposite. Or silver. You're talking about massive drawdowns of inventory no matter where you look around the world.
Well, Andy, let's talk about that March 15th date as well. My friend James Perloff sent me this blurb from David Stockman. I knew, of course, about the debt ceiling hitting a hard stop on March 15th, but let me just read this to you. March 15th, that's the date that this debt ceiling holiday that Obama and Boehner put together right before the last election in October of 2015. That holiday expires. The debt ceiling will freeze in at $20 trillion. It will then be law. It will be hard to stop. The Treasury will roughly have $200 billion in cash, and we're burning cash at a rate of $75 billion per month. By summer, they will be out of cash. Then we'll be in for the mother of all debt ceiling crises. What's going to happen, Andy? They're going to just have to have some emergency session and pass a law and raise the debt ceiling, or what? Armageddon?
Well, look, we go back to the fall or the summer of 2011, the last time we had a major debt ceiling crisis, and that was the one when gold in dollar price, in dollar terms, hit an all-time high, and the U.S. was stripped of its credit rating, and Europe was amidst a giant political and economic crisis. And here we are 6 years later. The debt ceiling, then it was 14 trillion, now it's 20 trillion. And all those things I just talked about are much worse. And of course, the only reason our credit rating isn't any lower is because the government basically sued and blackballed the S&P to the point where everyone is terrified to do anything about it. But all these governments are insolvent, and we all know it. And as for this debt ceiling, I use every bit of my Spock-like logic to try to figure out why, in hindsight, that was done, because you can see, why in November or October of 2015, why the Democrats would want to push off the debt ceiling to after the 2016 election, because obviously they wanted to borrow and spend into oblivion to get Hillary Clinton elected, which they did, except she didn't get elected. But as for John Boehner and the Republicans, why would they have possibly done that? They had the Democrats over the barrel, and yet they let it happen. So again, that proves to me that the government is one party, and there's not a shred of difference between any of them. But here we are. The debt ceiling will in fact be created again at $20 trillion on the 15th. And no, they're not going to just get together and raise it because this is, first of all, we're talking about an historic polarization and hatred within government. With the Republicans with themselves hating Donald Trump, many of them, and of course the Democrats, which are no longer even Democrats, and Republicans, which I don't even call Republicans anymore, are at each other's throats. And of course, Trump has promised all these things that he can't get done without the debt ceiling increase, and a lot of people want him to fail. And look, he himself said, I can't do anything without an Obamacare repeal. And of course, what we saw yesterday, that abomination is going to be discussed forever. It'll never get done. So I think we're going to have, as Stockman said, the mother of all debt ceiling crises. Look, the ones back then were horrible. There was one in 11 and then another one in 13. They created the sequester and there was shutdowns. I think we're going to have all that times 10 this time around, because I can't see how they agree on anything, certainly in any kind of material amount of time. And of course, the end game of all that is the only thing that they, ultimately both parties want to agree to massively raise the debt ceiling so they could borrow and spend into infinity, which is exactly, by the way, what Donald Trump is proposing to do. So either way, it's going to be good for precious metals and bad for everything else. And again, that March 15th also happens to be the day that the Fed is going to insanely raise interest rates. Just the increase in rates and the dollar in the past week alone, since this gamut to push precious metals down. And I don't even know why they're doing this. Are they trying to get back at Trump or what? But it's going to cause the economy, which grew at 1.9%, if you believe the Cook numbers in the fourth quarter. Now it's down at 1.2 for the first quarter. It'll probably be negative in the second quarter. It's theoretically like one of the longest expansions in history. We have to have a recession at some point. And if the Fed raises rates here, it's going to seal that doom. So that is a big event, those two events on that same day. And it happens to be the day of the Dutch election as well, which will get the ball rolling in these anti-Euro, anti-EU populist movements in Europe. Of course, the big one is France a month later. And the key word is crisis. And the fact that we haven't had an actual major financial crisis in a year because of all the manipulation is saying that we are more overdue for such than any time in history, and it's going to happen. It's just a matter of when.
Yeah. All right. Well, March 15th, all eyes are on March 15th, and I'm going to read this for students of history. So, the David Stockman quote I read was sent to me from my friend James Perloff, who then sent me an article where he really flushed this out. The name of the article is From Washington to the Middle East, Should the World Brace for March 15th? And I didn't know this about March 15th, but that's why we have guys like James Perloff out there to remind us. He says, March 15th is an important anniversary. For those who don't know, the Rothschilds have long been the human center of the deep state. For the Rothschilds, March 15th, 2017 will be exactly the 100th anniversary of the day when their most hated enemy, the Tsar of Russia, abdicated. This paved the way for the Bolshevik Revolution, which they financed, followed by the slaughter of millions of Russians. For the Rothschilds, 2017 actually represents many significant anniversaries. The 50th anniversary of the Zionist seizure of Jerusalem, 50th anniversary of the attack on the USS Liberty, 100th anniversary of the Balfour Declaration, 100th anniversary of the Bolshevik Revolution. I'll put up the graphic here. There's many more coincidences here about March 15th. He also notes that March 15th is the Ides of March. This all brings me to my question, Andy. You and I have been talking for a very long time about that 1988 cover, The Economist magazine, predicting a world currency. Get ready for a world currency in 2018. Seems to be a lot of Rothschild ties in here with the March 15th date, and that puts us, 8 months away from 2018. I think this March 15th date could really spell the beginning of the end.
Well, that's not really my area of focus. Many people do focus on that area, like Bix and like yourself, and I'm not discounting the fact that there's it may not be a coincidence that so many things are happening all at the same time. But that said, it wouldn't matter what date it was. All these things mathematically are a certainty, meaning, well, I don't know if we're going to have a global currency. What I think what's going to happen is there's just going to be a loss of confidence in the fiat currency system. And I think I don't think there's going to be any way that it's going to be restored anytime soon. That's why I think cryptocurrency is so dangerous to the powers that be, because from a storage of value, they already have to worry about gold and silver. Now they got to worry about Bitcoin as well. So I think that the trend is going to be people moving away from centralized currencies and not trusting their governments. And governments may try to institute SDRs and all kinds of stuff, but I think that the fallout from this wipeout, this ongoing wipeout, which really hasn't even gotten to its real dangerous stage yet, is going to be so devastating to the powers that be and their status quo that I don't know that we'll ever have centralized currency systems again after all this.
You mentioned Bitcoin, and I joked with you before the interview began here that we ought not mention the name Bitcoin. Our last interview was titled "China Can't Beat the Bull Out of Bitcoin," and that interview did about as poorly as any you and I have ever done, and I think it's because Bitcoin is in the title and we're talking to silver and gold bugs. But, the point does need to be made that the cryptocurrency that shall not be named is now undergoing evaluation for having an ETF. So the Winklevoss twins, who were involved early on in Facebook with Mark Zuckerberg, they're seeking to have a BTC ETF, and it's been said that if that thing gets approved by the SEC, we could see the cryptocurrency that shall not be named spike to $3,000 in short order. Irregardless of that, Andy, what do you think the price of that cryptocurrency is telling us? Because it cannot be as easily manipulated with millions of paper ounces per day on the COMEX like silver can be.
Right. Well, look, people who read and listen to me know that I've been a major proponent for some time. In fact, I just put out an article this weekend about that very topic called, it's called Same as Ever Was, Bitcoin and Precious Metals in a Rapidly Changing World. And, what I've been trying to do is I've been trying to get people in the precious metal world to stop considering Bitcoin this big competition of it and realize that we're fighting the same fight against the same people. And it's just they're different products, but they are doing the same thing. They are storing value, and people should be rooting for cryptocurrencies to do well, because that's going to weaken the powers that be in the fiat currency system. I mean, ultimately, I've said this all along. There's not going to be a gold standard. That's ridiculous, because that would require trust in governments, trust that governments would have the gold and silver that they say they have, but they wouldn't encumber it or cheat, which they have done. That's exactly what they've done in this country, in every country where there's been a gold standard. And again, people wouldn't trust the government to say that they had the gold, and wouldn't trust. I mean, you had in 1933, you had dollar bills that say backed by gold, and then FDR said, guess what? It's not backed by gold anymore. So, that whole concept is ridiculous. Gold is going to be hoarded, as it always has been, as a storage of value. And Bitcoin is the same thing, except it has some very, a lot more useful monetary properties from a day-to-day basis. Plus, it's decentralized and over the internet, which is why governments fear it so much. So again, I'm not predicting anything. People know that I own it and in favor of it, but I have a lot more gold and silver because of its long track record. But I do believe that once you get past this ETF thing, which at this point I don't even know if they'll approve it. It's going to be in the next few days or so. I mean, there'll be plenty of other issues, whether it's the Chinese trying to limit withdrawals, or eventually the United States will probably do the same thing because they think that they can stop it. And they're going to have a hard time stopping it because it's decentralized, and they're going to start to focus more and more of their resources trying to stop it. And this is at the same time where they're already at historically low levels of gold and silver inventories and credibility in the paper market. So I think it's going to be, I think together, as I call them, I wrote an article last May called Bitcoin and Precious Metals, Twin Destroyers of the Fiat Regime. I think they are separately working together to destroy the same beast. And in the big picture of things, I think both are going to play a role in the future world, in many ways for the same use of storage of value, and possibly for different uses as well.
Yeah. Well, I'll say this, too, about the Winklevoss Twins Bitcoin ETF. If that does not get approval in this round and Bitcoin corrects to 300 per coin, it's my very, very strong opinion that that will be an extreme buying opportunity for anybody who either wants to add to their position or get their feet wet for the first time. I fully intend to buy another Bitcoin should it plummet if that ETF is not approved. I think that the long-term trend, Andy, now suggests that Bitcoin and Ethereum and these other cryptocurrencies are here to stay. Gold bull, silver bull, or not, we do need to be realists about the fact that cryptocurrencies appear to be here to stay.
Cryptocurrencies were born of the, and again, I'm not endorsing any specific one. Obviously, I own Bitcoin, but as for Ethereum and all these, they are far more risky. That's for sure. There's what you call altcoins that don't yet have the use cases that match their market caps. But again, it was born of the same reasons why people own gold and silver, because people are skeptical of centralized monetary systems which have destroyed the world. I mean, my article today was called How Technology and Incompetence Destroyed the World, and no better way than fiat currency. And now that we have modern technology, which is, as I wrote in the article this weekend about Bitcoin and gold in a rapidly changing world, meaning technology world, we now have technologies that make it easier to beat the powers that be at their monetary game. So again, people, don't think of Bitcoin as your enemy. It's your friend if you're a precious metal owner like I am and you are, because we are fighting a war to the death against powers that be who, frankly, we have the cards up our sleeve. They don't. They just have the access to the money printing and to this historic manipulation scheme, which is going to die in the vine. And when you see currencies crashing and inflation and interest rates surging and all the political regime changes and crashing economic data and surging debt, I mean, they're obviously not winning, and they're down to their last rope, which is, like $2.7 billion paper hits on the COMEX, which are only going to drain out whatever remains of the physical supply faster.
Yeah, and I want to leave folks with this as it pertains to Bitcoin. For those who think that it is just a manufactured gimmick by the bankers to usher us into a cashless society, I've actually made that argument. That's completely possible. But I'll say this. Uber criminals like Jamie Dimon, right, the head of JP Morgan, back in 2015 and early 2016, was saying things like, virtual currency will be stopped. There will be a government crackdown on Bitcoin and other virtual currencies before they get big. They're already big. He said Bitcoin will not survive back on November 5th, 2015. Not only is it surviving, it's thriving. And so I think that if the people that represent this old paradigm were very anti-Bitcoin, it suggests that Bitcoin is for real. And I think that that's the conversation, Andy, that needs to be had.
Of course they're anti-Bitcoin, and you could have easily just substituted the word gold. Gold will be stopped. It'll be cracked down. Well, I mean, that's exactly what they're doing right now. They're trying to stop it because it threatens them, and it certainly threatens JP Morgan on every front. So, again, they will throw everything, including the kitchen sink, at them. I guarantee you that, the road up for Bitcoin will include many, many more shocking news stories about how governments are going to stop them. But is that any different than what gold and silver have to deal with? And again, gold and silver, let's use gold, for instance. Yeah, it's down 36% or whatever from its all-time high because this is the center of manipulation. But for all of those efforts to hold the price down over the years, in many countries, gold is at an all-time high right now. In many big countries, I mean, in euros, gold's only about 15% from its all-time high. In pounds, it hit an all-time high right after the Brexit. In yen, it's only about 8% below the all-time high. In Canada and Australia and Mexico, it was either at or near all-time highs very recently. So again, for all the efforts to crack down and the propaganda and the naked shorting, it's slowly but surely dying, and eventually in the center of manipulation here, it will die, just as the purchasing power of the dollar is set to fall a lot more rapidly than the steady, slow but steady purchasing power declines that we've seen in recent decades.
Yeah, and I'll leave you guys with this final word here. It's just shocking to me that March 15th is right around the corner here. It's a date that's significant in history. It's a date that's now going to be significant in American history. If this debt ceiling becomes permanent, it could really choke things down. And in the face of that, we see silver being pummeled by the cartel. When March 15th, to me, Andy, should have these metals racing much, much higher as logical people take steps to try to protect themselves. Final word from you, and tell us how people can get a hold of you.
Right. And again, I'm not saying that March 15th specifically has to be a catalyst date. I never speak in those terms.
Yeah, it could be the beginning of the end, though.
But the fact is that, there are three very, very significant events, each of which has the potential to start, the ball rolling in the wrong direction against these monsters that have prevented their biggest fear, which is a financial crisis for all these years. And so, it's hard to believe that at least one of them, particularly that debt ceiling crisis, is not going to, have some adverse effect on those plans. And again, Miles Franklin, 28 years in business, not a single registered complaint. We now have onshore purchasing. We have a private safety deposit box program that no one else has. Just read me every day for free at the Miles Franklin blog and call us. You can call us at 800-822-8080 or email me at ahoffman@milesfranklin.com.
All right, Andy. Thanks again for your time.
You're welcome.
And guys, thank you so much for tuning in. Check us out for real news 24/7 at SGT Report, thephaser.com, and thelibertymill.com. We really appreciate it. Thank you so much for tuning in. Bye-bye.
Basically, they have about $2 billion cash, and they're burning $75 billion, a month. That's the federal burn rate. So right around June 1st, they're going to be out of money. And this thing is coming into law on March 15th.